Good evening, peoples. Bruce with Targeted Wealth Creation. I'm here working on something for you guys. I always tell you I like to tell you the truth. I like to let you know what I'm investing in, what I see the markets doing, and I think for the most part, you guys appreciate that. So while I still have some interest in income funds, for the most part, I don't. And that stems from what I see in the market going forward. I see a radically different market than we've experienced in the last 3 to 5 years. First off, I see the S&P 500 going down anywhere from 10, 15 to maybe 40% over the next 1 month to 13 months. And I've outlined that in my last video. Secondly, I see over the next 4 to 8 years a very upside market in real things, things that people have to make, not large PEs, not your FOMO stocks, but simply stocks that make something. So commodities, right? And when I say stocks, I mean people who participate in that. Otherwise, you could just be a wheat farmer, a gold miner, a copper producer, so a lot of the real things that people need. We need to eat, we need shelter, we need fire, we need energy. I laughingly say fire like a caveman. He needs shelter, he needs food. He can go out in the forest and sharpen a spear, make a spear, and go out and hunt animals and forage for himself. So in today's world, it's much, much different, but we still need energy and we still need real things. So I see this commodity cycle giving us some real opportunities. Now, when it fits, you can certainly get in a commodity oriented income fund. But for the most part, I'll be playing these commodities by buying 1Xers or 2Xers or junior miners or junior, agriculture companies, a lot of different ways to play this space. So I'm going to be talking about the shift, and then I'm going to be talking about how I'm playing it, how you can play it, and bring you a lot of different opportunities. So if you have interest in learning this, I haven't figured out my schedule, but I plan to do this type of thing 3 times a week. So I'll be constantly updating. I'll show you charts. I'll show you what I'm looking to play, sort of looking over my shoulder. Obviously, I already own a number of these plays, but I'll let you know when I'm looking to add what I think good add values are. So let's jump in with an oversight. So, why do I think commodities? Why do I think that sector? What's going on in the market? So, I started with this chart. It's called cash flow margins by sector and gold companies. So, what is undervalued right now? And what is producing the most income? Well, most of you'd say, well, it's NVIDIA. Not really, right? As I said to you, well, I see NVIDIA, I'll short it when it gets to 130. If it gets there, somewhere 131, 134 would be, to me, the perfect short. Now, how am I shorting it? Not by borrowing shares, simply by buying an inverse. There's several of those. We can get into that. But rather than talk about what I'm doing, and some people view that as negative, and in some ways it is. But I'll play it up, I'll play it down, I'll play whatever way I see it. Most of you know right now, other than some precious metals, miners, a little bit of wheat, some platinum, and UVIX, I'm playing the volatility, which I expect the sell off to begin here in October. So I'm playing it through UVIX. Before I was playing options, but right now UVIX is cheap. It's $6 and something. I was in it in the low fives, nibbled with a little bit more and an opportunity in the high fours. And basically, I'm up on that. I'm looking for $20 on that. So when you got a $4 and $5, plan, getting 20 would be fabulous. It could go to 40 or 60. I doubt it, but anything's possible. But let's jump in here. Look at these sectors. So precious metals, which have just still horrible. Gold's at an all-time high. Silver's not. So silver's super undervalued relative to gold. Platinum is massively undervalued. It typically averages above the gold price. It's way below. So you want to buy things on sale. I know a lot of you like sales, right? Energy is super undervalued. Oil's been knocked down. And a lot of this is, frankly, just the fear of recession. And frankly, if you ask me, I think we're already in a recession. But we'll see when the stats come out. So these first categories, everybody knows in a cutting interest environment that utilities do well. Well, there's a second reason utilities do well, because all of this AI, and there's certainly some good things about AI in terms of productivity and what it brings, but this investment that's driven NVIDIA up on the hardware side and will drive up a lot of other stocks on the software side, overall, I think that FOMO is dying off. But nonetheless, just sustaining Microsoft and Oracle and all of these big Amazon, AWS, Azure, all of these big cloud-based systems that sort American industry. They're sort of the data centers of the current ilk, right? Or these cloud farms and so forth. So in order to do that, you need massive amount of energy. These utilities can't build, you know, Duke Energy, for instance. There's a lot of great energy companies. That Manassas, Virginia, that whole Virginia countryside is full of these massive data centers from Microsoft and Oracle and Google and you name it, the big players there, Amazon. So, where do I see this kind of stuff? When it's undervalued, you have to buy it. And oil's been beaten down, which I think it's going to turn up. Uranium represents another massive opportunity because it's by far the most efficient energy producer there is. So, let's dive into that stuff a little further. When I talk about metals, look at just a few charts when I find something that confirms what I'm saying or shows you guys data. I could tell you all this stuff, and you say, "Oh, Bruce, how do you know that?" So I like to show you some supporting data. But the reality is, I have an immense background in this. I traded all of this precious metals and commodity and oil um, in the 2000. Right after the bust, I lost a lot of money in corporate stock and options and other things that I had that I planned on retiring. So I had to rebuild my wealth. So I did an 8X in that decade from 2001 to 2011. And then I quit big tech. I just quit working in that environment. There were a bunch of layoffs and things happening, the '08 debacle, but I was killing it in all my commodity and my wealth. And so I learned how to trade it, how to play it, what to look for. It's a lot more complex than meets the eyes. Like, what do you buy? Just like a lot of you guys that have been in UMAC. Do I go to the BTC? Do I buy a Misty? Do I buy a Coney? Do I buy NVIDIA? So all these different goats jump around, right? But not many people are buying ExxonMobil because, quite frankly, while it's a fantastic company, pays a 3% dividend. Who wants to participate? Before I got into Yomax, I was getting anywhere from 15 to 35% in PBR and PBRA, the state-owned, state-run oil company in Brazil. So Petrobras had some political issues with the new president a while back, but overall, that's fabulous. So if you want to do nothing more than it's about a 17% return now annualized on your money. You're paid every quarter. But when I was getting 35 and 40%, was when they were selling off some of their infrastructure assets and then paying that out in profits. So it's still a fantastic. Some of you are looking for income. Buy PBRA. It's 10% or so cheaper and it pays the exact same dividend. And by the way, people, for those of you worried about taxes, these are qualified dividends. So you don't really pay any taxes up to a certain threshold. You can look up that. But typically it's zero interest up, for the first 15 or 20,000 and then like 15% after that. So again, look to your tax advisor. I don't want to give you specific tax advice. So let's just start with gold. So cup and handle, very simple. You guys know that follow me. I'm big in technical analysis and look. So you measure from the bottom you would call this an inverse head and shoulders, right? So if this was up here with a head up here and shoulders on the side, we would measure it down. But in this case, we measure it up. Sorry, guys, there's some construction going on outside. But anyway, so this measures up to 3,200 on this cup and handle. Could it take 3 to 6 months? Sure. Could it happen in 60 days? Absolutely. But the point is, and I would say this is if you saw a pullback to this trend line, sometimes you get that. You move up above it, you pull right back. I doubt that it gets there, but could it come back if the market sells off hard? It would take gold down with it, absolutely. So gold and the miners would be a fabulous buy. Here's a chart that now, while Hecla hasn't been the greatest silver producer, and again, I'm going to show you some silver stuff, silver is massively undervalued, right? Gold's hitting all-time record highs. Silver hasn't even passed its 1980 high. It also hit that number again in 2011. So I'm looking for 35, 39 silver in the next month or two. It's at 31 something, almost 32. Could it pull back to 30 or 29 here? Absolutely. Guys, you have to look to buy more and then buy more again. I own 250 ounces of pure gold eagles. Well, some of them, I'd say 50 of the 250 are Canadian maple leaves. But that's my store of value. I did that all the way back when it was $1,100 gold. I saw it go to 1,900. I thought about selling. I didn't. But when it came back down, I bought more in the 1,300 range, right? So I'm happy with the amount I have. With silver, I have a couple of monster boxes. So I have like 2,000 ounces of silver. And it takes up a lot more room and it's only worth, 65,000 or something versus the gold is worth a lot relative. So silver is massively undervalued. But do I play the stocks? Absolutely. So here's a big time silver miner. It's a 50-year chart, people, and this is known as a wedge, right? So this thing needs to break out and break out massively, right? So I think something around 796 or something would trigger for me because you can have, look, they had a false breakout here and it pulled back. But when this thing goes, this has probably got $30 on it. You're talking about a $7 stock. Well, it's not going to be 30 overnight, but it's probably going to be 30 in a year or two. I mean, silver, you'll see on my chart, I see silver at a minimum of 180. Silver again, $32, right? So 180, that's a 6x. So typically what you have when you have miners, you have what's known as your large cap, your big producers that are in the GDX, and then you have GDXJ, which is your medium, and then you have way down, you have your explorers and developers. Well, some of those will 50x, 100x. Typically, your largest quality, your Newmonts, your Anico, Eagle, those stocks with GDX going from, say, 39, 38. It'll probably visit 37 or 36 short term. But I see 60 in 2 to 3 to 4 months. I see 160 in 3 to 4 years. So it's massively undervalued, the miners. The miners, the larger cap miners, which go up the least, but they're the most, I shouldn't say they're the most profitable. They produce the most gold and they're the biggest companies, so they tend to be stable. They're probably 4 to 5x by the time we're done with this. So if gold goes from 2,500, okay, it's already in the 26s. But if gold goes from 25 to 7,500, I think that's minimum of gold in say 4 years, 5 years. So with a 3x move, you're probably looking at a 5 to 6x in the big miners. The mid caps that do well are probably 6 to 10x. And like I've said, some of the juniors are more. Now, I'm not trying to throw out fluff, and be conservative. I mean, here's my little inverse head and shoulders. This is like, a couple of weeks worth of trading, right? We're talking about the 19th, but this gives you an example that right now, unless this thing breaks out above this line, it will eventually, but it measures down from, to 42 to 39 and a half. So that's $2.50 down below this. So that spells 37, people. So if you see 37 and we're not massively selling off in the markets and, we're just plummeting, then I say you jump in and buy some GDX or you buy some individual miners. So I'm going to be doing more and more and more on this. I got so much data that I could do 5 hours right now. I'm going to try to do 30 or 40 minutes and do 3 times a week. And then I'm going to move into oil and wheat and agriculture and uranium. I just don't even have time to get all there. So I'm going to take you through just some of my analysis. Here is a GDX chart because we were talking about that. So 60, 67 is a target. I think we get there within 2 to 6 months. But it doesn't mean that we don't go visit 37. You just have to buy things. Could it go to 35, 34? Could it even go to 30? Yeah, if the markets went down 15% and everything was liquidated, then all that is a great opportunity. So nibble in on these things. Buy some of this stuff. This is the future. Here's an uptrend channel, right? So again, what do you see here at 30? 30 would just be an absolute support spot. But so would 37, right? For a mid-level. So guys, you just have to start owning some things that are going to make you money. I know some of you guys on my channel have just been income guys. I'll talk about some of those opportunities, but frankly, I don't think that's the way to play the markets anymore. I really don't. I think these funds are going to struggle. You're already seeing in yield max, they can't get their act together with the spreads. They do 10-point spreads, 15-point spreads. They're all over the place. Make up your mind. I think they'll do better with their targeted funds when those come out. And they just say, hey, we're going to try and stabilize that and we're going to give you a 20% yield. Something like that makes a lot more sense, but I wouldn't be buying RDT or XDT or QDT personally over the next 3-4 months because I don't trust where the markets are. I don't want to lose a lot in my NAV. But if I'm a long-term investor, I'm in my 20s, 30s, 40s, I've got a 20-year horizon, then by all means, keep averaging in DCA, continue to buy the S&P 500 index and all that. But honestly, I'm giving my opinion based on a lot of data and things I know about, invest in, and watch and study for years and years, that we will outperform the S&P index by being a commodity, say over the next 6 years. That doesn't mean it's going to do it for 20 years. And that doesn't mean the S&P doesn't go up in the next 6 years, say 30%. But so what? It goes up 30%. It may average 5%. It may have a 20% down year in there. I don't think these commodities are going to have those big down years. Okay. So here's a golden cup and handle, right? So you just look here, we get the same kind of targets, 3,000 plus. So I like to show you data from many different sources in many different ways. Goals probable direction based on the trend phase of the 54-year cycle at play. Look at this. I said 7,500. There's one that said, I honestly think with the kind of inflation we're going to end up having later in this decade, it's probably 10 or 12,000 on gold. And a lot of it's going to have to do with the BRICS and some of the other alternative currencies and the power shift to the east. Here's silver producing the mother of all cup and handle formations, right? Look at this thing. I told you, this is, back in 1980 when it went here, it came back up in 2010, 2011, and then it sold off, and now we've had a couple of spikes. I think, again, it could well be 2025 before we see $50. But I think we'll get a bounce to 35, 39 here anytime, assuming we don't sell off hard right away. But right before that, and the sell-off could be this week. It's more likely the week of October 21. There's a lot of potential for black swan events, and it may not even take that with Iran, Israel, Taiwan. There's just so much out there. Russia. I mean, there's just this election, there's just so much war cycle stuff going on, people. Look at silver. I mentioned 180. I've got some people, yeah, they're clickbait headlines, but it's still possible $300 silver. Why? Because silver is needed and used. It's used in ammunition. You talk about wars, right? It's used in the guidance in a lot of these missile systems. It's used in solar. It's used in healthcare. It's the greatest electrical conductor along with copper of all the metals. It's used in cell phones and computers and tech like crazy. The other thing is I look for undervalued, right? Platinum traditionally is worth more than gold because it's found in the ground. It's harder to find. But it's been trading well below gold. So it needs to break out. But when it breaks out and gets going, it's going to really, really run to get back up to its normal. So what does it have to do? Look at this chart. This is the platinum gold ratio. Unbelievable. It just continues to sink and sink and sink. So it needs to show me, those of you from Missouri know the show me state. So I guess I would say I own some PLG. It's not even the best. SBSW, Sabani Stillwater. It's a fantastic. If you look at that stock, its stock chart looks like this. But do I think it's going to be multiple times where it is before long? But again, you can wait for the breakout. You could say right here, well, I'm going to wait till it gets up here. And nothing wrong with that. But I own some PLG. I bought it at 150. A week after I bought it, it went to 210. I thought about taking some off the table. Then it went back to 160. It went down as low as 120, 130. Now it's back at 150. I mean, it's not a fantastic, there just aren't a lot of platinum-focused miners, okay? You can buy physicals. Sprott has I think it's SPPP. And I got more on that later when I get into the metals. But look at the federal government. What's our situation? Well, the federal government interest payments, if you really look into this versus what our tax receipts are, this last administration has just killed us. Nobody's done a great job, and some have better tax reform, but all our governments, I mean, it's a race to zero in currencies. I always say sometimes the dollar is the prettiest girl, but in the room, but they're all disastrous. They're all fiat currency. None of them hold value. BTC ultimately will become a digital gold and have tremendous value. Not all the altcoins, but BTC. Gold will continue, and you're seeing it right now. You know, BTC is trading more like Nvidia. It's trading more like a Nasdaq stock, right? They're all going to go down if the market goes down hard, right? From a liquidity standpoint, gold, silver, all the metals, all the commodities, pretty much everything, probably utilities less so, but you can find some bargain. Look at this inflation. I've been saying this for a long time. Right now, we're in this low point, right? If anything, we got a little bit of deflation. Well, that's going to turn around quickly because when rates go like this, oh my God, gold is going to go through the roof. Um, your interest payments on credit cards are going to go through the roof. Food's going to go through the roof, which it already has. I mean, I'm not telling you, only, this is reminiscent of the 1980s, this stagflation cycle that we will set up. By the end of this decade, it will be very ugly. You won't even need these income funds. If you've managed to do well in the markets, you'll probably be able to lock in 17% on a 30-year bond or something, which you could have done in 1980. Think about that. If you'd held that for 30 years and gotten 16, 17% on your money, it was there, but who knew? Well, you got to look at history and you got to look at trends. Here's another thing I'll wrap this up with, guys, because I'm not going to do too long here because I want to save all of my stocks and metals and platinum and uranium and agriculture and oil, my recommendations, what I'm buying, what I own. I'll probably do it Tuesday or Wednesday, and then I'll do another Friday or Saturday. I know if I make this too long, no one can watch it during the week. It's already long. So, a lot of you guys, not only October, but I see us over the next 13 months, okay, anywhere from 15% down to as low as 45% down. Now, I also said when we were around 56, 55, 56, I could see 7% upside. Well, that only measures to about 6,000. We may never get there. We may only see 58 and that's it. We could go to 6. But what does that do? That opens up 4, right? And lower. 40. So anywhere from 45 down to 35 is probably a target. So that's what I see. And depends on how it does it and how aggressive. Some other things could go down, but I think Bitcoin and I think gold will do very, very well during that. You talk about the most undervalued thing to own right now is precious metal miners, but I hate recommending it until I think it's really going to run. I know in 6 months it will be massively higher, 50 to 100% higher on GDX. But could I tell you that it's not going from 39 now to 30? No, I can't, right? So be careful at what you buy. I'm mostly in cash, as I said, but I got about 10% in precious metal miners. I got about 8% in UVIX because I expect that to do really, really well, produce a 4 to 6x for me. I'll start taking some off the table at 8, and we can get that any day now because when you bought something at 4, 8's a nice double. Okay, guys, that's what I got for you. This is Bruce with Targeted Wealth Creation. Again, not financial advice. I'm not a financial advisor. This is for fun and entertainment. I hope you learned something on this. Ask me questions in the comments. Please like and subscribe. All right, people, bye for now. Have a great one.